Before we start, just understand this is not a signal service. Everything you see here is for educational purposes only. Trading involves risk, and the goal here is not to follow trades, it's to learn the process behind them.
Good morning, and welcome to I'm the Trader Capital Live Trading for Law. First and foremost, all glory to the Most High God. Let's bow our heads for a quick prayer. Our Heavenly Father, we thank you for your grace and your mercy. We thank you for another opportunity to try again, to learn, and grow in these markets. Father, we ask that your will be done today as it is in heaven. Father, I ask that you give us the heart of a giver and make us a lover of our neighbor. Please let me not lead anyone that listens to me astray, but use me as a vessel to bring your children back onto you. In Jesus' mighty name we pray. Amen. Can the church say amen? Amen. Let's begin. Before we jump into the charts, I just want to say this. There was a time I used to sit down on the charts with no real plan, jumping between strategies, losing, blowing accounts, second guessing every entry, and honestly just hoping that the trade would work. And that's where most traders are today, not because they're not capable, but because they don't have a structured process. The biggest pitfalls that causes traders to fail is that they have no knowledge on money, they don't know how to lose, they don't know how the markets operate, and they don't have a winning model. 90% of traders fail, all 90% are plagued with one or more of these pitfalls. Today, I'm going to show you the 3 pillars that every trader must have in their trading to survive and thrive in the financial markets, so you can join the 10% who succeed and fast track your way to the top 1% of the wealthiest people on this planet. It's called the 10% to 1% club. Let's go. Woo! But before we dive deep into the 3 core pillars, when you step into this arena, on this battlefield, you must first have 2 crucial realizations. Realization number 1, trading is war. This is not a get rich quick scheme. This is the hardest thing that you'll ever do in your life. Realization number 2, all traders are money managers. As a trader, your ability to manage money is vital to your survival in this industry and in life as we know it. Most traders think that success in the markets comes from finding the perfect strategy or catching the biggest moves. But the reality is, trading success is built on 3 core pillars. First is money and mindset. This is the foundation of success. Then is risk management. This is the holy grail of trading. This is what will keep you in the game long after everybody else has quit. And lastly, we have trading edge. This is where all traders start. I know this because this is where I started. That's why in today's session, we're going to hone in on your trading edge. Now, everything that we do here is built around one thing, and that is confidence in your trading edge. And I am the Trader Capital. Our confidence comes from 3 things. First, it comes from understanding how the market actually operates. Not what social media says, but how money truly moves. Second is having one trader model. One model with IPDA signatures that we trust and execute on a consistent basis. Third is having a plan and a process, because without a plan and a process, you're just reacting to price and you're winging it each and every time. And this right here, this session, this is where we focus on the 3rd piece, the process. So many people lose confidence in trading and in life because they simply don't have a plan. There's no process they're following. There's no procedures and protocols that they're abiding by. They literally are just winging it. And they wonder why they can't get consistent. They wonder why there's ups and downs in their equity curves. They literally can't figure it out. The uncertainty of not knowing exactly what you're doing, how you're doing it, why and when you're doing it in the market will cause you to fail in trading. Confidence and certainty are key if you want to be successful in trading, and it's your responsibility as the trader, as the analyst, as the fund manager. It's your responsibility to attain that confidence, not only in your model, but also in your processes. So what I want to do right now real quickly is I want to share with you the process that we teach all our analysts at I'm the Trader Capital, and then we'll see that process live in action. This is the 3-step trading process. Step 1, condition. This is where we determine our bias. Before we even think about entering a trade, we need to know the market program. Are we in a buy program or sell program? This is where the market shows its hand. Then we have step 2, stage. This is what sets up your trade and what does your trade look like. There are 2 types of trades, retracement setups and continuation setup. Then we have step 3, execution. This is how you're going to enter, manage, and close the trade. At I'm the Trader Capital, we have 4 entry criteria before executing. I'm not here to force trades. I'm here to execute my plan step by step in real time. All right, let's get into the live trading flow. Now, as you're watching, don't just look for entries. Pay attention to the process behind the entries, because this is what will get you into the 10% of traders who succeed. And if you want to go further to the 1%, well, that's where we break down all 3 pillars inside of the program. I used to think that winning trades built confidence, but it's not the wins. It's knowing exactly what you're doing, when you're doing it, how you're doing it, and why you're doing it before, during, and after each trade. And that is what we're building here. Let's begin with our daily trading processes. All right, weekly target going to this week is 3%. All right, mental check-in, feeling generally okay. Excited to see what price action has in store for us today. Excited to continue to grow, all right, and get 1% better and just exercise discipline, right? Get closer to my model, my procedure, my processes, and the market, okay? I accept any risk that comes with trading today. I understand that trading comes with real risk and that losing is part of the battle. News is Tuesday, May 19th. It's Tuesday, May 19th, all right? We have medium impact news coming out at 10 o'clock, all right? We have news today, making it an optimal day to take a trade, all right? That's all we need. Medium or high impact news on the day, and it's an optimal day for us, all right? It doesn't matter how many news there is, all right? We just need one, right? We just need one. Risk going into today, we're at 0.25 of account size, and we have a max of 0.75 per account per day. Weekly program, let's go ahead and review price action overnight to see if one side of Monday's range has been taken so we can establish our weekly program. Let's get on with it. It's Tuesday. It's Trading Edge Tuesday. Don't mind the messy lines on this chart here. Don't mind it. Don't mind it. Another day we get to learn and grow. Become better versions of ourselves, you know? For the people, for not just for us, but also for the people around us. You know what I mean? This is Monday right here. We are snatching Monday's low. Okay, so we're establishing a weekly program as, oh my god, hold on, I already clicked it in it, as a sell program starting this week. Into Monday's range. What's the high of this? Oh, so it should be this high. Should be this low. Let's go back to 4 hour. Extend it for the week. Okay, we got our weekly program established as a sell program, okay, because we've taken Monday's range low. Okay, so let's adjust our higher time frame dealing ranges. $20 let's get previous day. We've got a volume imbalance in here on the daily time frame, also on the weekly time frame as well. Targeting previous week's low right now. Okay. Alright, let's get into our processes. Our 3-step process. Different day, same processes, isn't it? Nothing changes here, alright? We do the same thing, just a different day. the beauty of it, you know. That's where consistency comes from. Step one. Hold on, let me add this to where did it go? What just happened there? Okay. Just me fluffing around. Anyway, forget it. Forget that. We can do that when we have dead air. Step one, condition, right? Determine bias. In order to do that, we must first identify our dealing range. I'm going to remember today that it's not the fib. It's not the fib, it's the parallel channel. From 12 a.m. to current price action, all right, we note the lowest low. To highest high. That will give us our dealing range. And we just wait for one side of the dealing range to get taken, all right? We'll establish a condition going into today. All right, we already know what our weekly condition is, okay? We're in a sell program for the week until price reverses and goes to take Monday's range high. That's when we'll flip our bias for the week, all right, from sells to buys, okay? Until we come and we take Monday's high, which is currently previous day's high, obviously. Monday's high, all right, that was what will flip our bias for the week. Same for the dealing range, right? If we take one side and then we flip to take the other side, that also flips our daily bias. So this is to establish our daily bias going into the day, okay? You can use different ranges to establish that bias. I just preferred from 12 a.m. to current price action, okay? For the session bias, all right, we can also use the opening range. When the opening range completes, that will give us a session bias, which also can be different to the daily bias, okay? So just be aware of, you know, where you are in price and what program you're in, and is it a session program, is it a daily program, is it a weekly program? You can also do monthly programs too, you know. I haven't back tested that, but we don't need all that for day trading, you know what I mean? So is the 9:15, whatever the 9:15 candle, right, is 12 a.m. to current price, right? But obviously my current price is always going to be the 9:15. The last price is always going to be the 9:15 candle. Anyway, above dealing range, we got Asia session buy side, and we got PM session. Oh no, that's AM. That's AM session buy side. Yeah, we got AM session buy side and previous daily high. Below dealing range, we have previous week's low, which was a draw for me since yesterday. Below that, we have Asia session sell side from Thursday, May 7th. Should price continue lower, we'll go ahead and grab whatever is below that. We're about to kick off. Ding 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 ding. 9:30 opening bell. 9:30 opening bell. We are popping off. All right. Opening range gap is above price, so we gap down. So we have a discount gap down. Let's see what today has in store for us. Make sure I'm on the right account. I always want to start with the one that's in drawdown. Yep. Oh, we didn't even go over previous day. Bear with me. Yesterday I took 5 trades, 2 losses, 3 wins. Nothing's happening right now, so we can go ahead and talk about it. Talk about it. Talk about it. Yes, I took this 1250 macro continuation sell setup. Okay, sat in a bit of a drawdown. Stop was up here, right? Sat in a bit of a drawdown, but it came and took me out of the way. And then I also took this 150 macro continuation sell, same setup. All right, better trade during the 150 macro though. Okay, I took this on the 50k account. That's why it's not showing the arrows. Okay, it gave me 3 contracts, so I was out at -2 right there. This one, -1 was only the 1 contract. Larry came out at -1 there. Took a while, all right. We sat in drawdown for majority of the trade, but it ended up doing its thing, the thing. Did take a 1250, no, yeah, it was a 1250, 1150 macro setup here. Ended up being a loss, all right. It was a perfectly continuation sell setup, right? You're not gonna win them all, right? The only thing promised to us is losses, so I took another loss here. Ended up down on the particular account we're on right now, $66. Okay, so I took a loss, took a win, took a loss, took a win back on that account. Ended up down 66 on that account. Let's switch accounts so you can see the other arrows for, then we'll come back to that account. Just to show you that I ain't talking on my ass, mate. We really doing this shit right here. We really doing this shit right here. Where is it? There it is. Well, why is it not showing though? That's a fuckery, mate. We don't need the labels, we just want the marks. Okay, this one don't want to show. It's alright, it's okay. It's okay, it's alright, it's alright. It's okay, it's alright. It's okay, it's alright if you don't want to show. No, that's not where I want to go. I have proof. If you don't follow me on Twitter, go ahead and hit that follow button. Oh, there it is. There it is. This is the one that they want to show. 150 macro. Beautiful. Straight to the point. Clean. That's all I wanted to do. It's Trading Edge Tuesday. It's in Rowdy. Just in case you never know. Just in case you never know. Oh. Yeah. Love you, girl, do the same. I don't wanna. Yeah. No game. You're the only one to do. just play it straight. Straight. It's Trading Edge Tuesday. We about to drop some sauce up in this place right now. Help you gain confidence in your trading edge, okay? By showing you how we gain confidence in our trading edge. Straight A. So we already talked about trading edge, right, in the beginning of this session. We open up with the three things, right, that build confidence in our trading edge. Then we narrow in on our processes, okay, all right, and then that's pretty much the only aspects of trading edge that is being taught here. So we're gonna go obviously deeper into trading edge. We're gonna dig a little deeper. Almost filled in open range gap right there. I didn't even realize that. Coming from previous daily low, took liquidity below it, market structure shift right here above it. See if 15 seconds would have. Here, took that liquidity 15 seconds. Ooh, look at that entry right there on a supporting time frame right there after taking a 1 minute liquidity below previous daily low. Ooh, that was nice. Super duper. Soups. Baby, just play it straight, no game. So Trading Edge Tuesdays. As we all already know, all right, I'm the Trader Capital. Our confidence in our trading edge comes from three things, right? It comes from understanding the market and how it truly operates, okay, which we'll dive deeper into today, okay? So we're gonna drop some sauce up in here today, all right? And then secondly, it comes from having one trading model, all right? One model with IPTA signatures. We'll talk a little bit more about IPTA and who or what IPTA is, right? IPDA, all right, IPTA, all right? One model with IPTA signatures, right, that you trust and you execute. You've back tested it, all right? You've walked it forward, you tape read it, and you've demo traded and you've built confidence in that model, and you know from your data, right, that model is probable, right? It's profitable. It makes you money because you've collected data on it. You've watched it pan out in real time, okay? You've demo traded for a period of time and saw the consistency of the model in between different market conditions, right? It's still shown you to perform, okay? And then thirdly, you need a plan and a process, because without a plan and a process, all right, you're winging it and you're guessing each and every time, all right? Successful trading is boring, right? You're doing the same thing each and every day, all right? It's just like your regular job. So we're gonna dive deep into those three things, all right, that built the confidence in our trading edge, okay? So understanding how the market operates. Now, in order to understand how the market operates, this is why money and mindset is pivotal, right? This is why you have to master there are two things that you need to know about money, okay? And in order to understand how the market operates, you need to know the who behind money. And as we already talked about on Friday and on as yesterday we recapped it, okay? The central banks, all right, they own money. The thing that we know as money is their asset, is their commodity, okay? So they set the price of it, they control it, all right? And the way they do that is through the open market, buying and selling government bonds, okay? So they're in control of money, okay? All right. They're in control of the open market, right? They own it, it's their asset, right? They can set the price of it, okay? So by knowing that, right, when we talk about how understanding how the market operates, right, it's a pivotal point in understanding how the market operates. Understanding that this mechanism here is controlled and is a great thing. I love that it's controlled. It's great that it's controlled. I mean, that means we can track it, right? That means we can track it. We can see its movements, all right, and get a model from it, right? Take a little piece of the pie of where we believe it's going, right? Due to characteristics that we've seen, that we've collected data on, all right, based on IPTA signatures, all right. So that's the first thing you must know in order to understand how the market actually operates, okay? You must know the who behind money. One second, guys. Uno momento, por favor. All right. So, Alice, stop rambling on about, understanding the market. How does the market operate? How does it do it then? How does it operate if it's not, by buying and selling pressure? How does it operate, right? Okay, market efficiency works for smart money, okay? Not the everyday speculator, trader, or investor, okay? And smart money is just central banks, right? The people behind the scenes of money, okay? They're smart money. The markets operate under central bank control via an algorithm, okay? The common misconception, all right, that everybody that steps into this arena, all right, traders, speculators, investors, the common misconception that we believe, all right, is that buying and selling pressure moves the market, okay? Well, this is what we're told, right? This is what we're told, that is buying and selling pressure is what makes these candlesticks go up and down, right? This is not true. This is false. Remember in Money and Mindset, we talked about what do you believe to be true about money, right? That isn't true. The same thing here, right? You can ask this question in every area of your life. What do you believe to be true about certain thing, all right? How the market operates, all right? That is not true. Have you done the research, right? Have you looked into it to see if it's true or not, or you heard it one time that buying and pressure moves these candlesticks up and down, and now it's law for you, right? It's what you live your life by. Have you done the research? Right? What do you believe to be true about how the market operates that isn't true? Ask yourself that, and then dig into it, do the research, all right, and ascertain if it's true or false for you, right? Only you can find the data for yourself, right? Don't go believing other people just because I'm saying it here too. Don't go and believe me, right? Go and do the research for yourself, okay? Right? One second, I lost my thing here. Right? There seems to be a disconnect, right, between people's thought process about how the market operates and the reality of the market. To understand the charts and how these candlesticks move, you must first understand the market efficiency paradigm. Okay, now when ICT showed this, or when I learned it for the first time from him, All right, this was a game changer for me. This is what like really opened my eyes to how the market truly operates, right? So in here is a zero sum game, right? What that simply means is if I'm winning, somebody is losing on the other side of my trades, right? And if I'm losing, somebody is winning on the other side of my trade, right? And if you're losing, somebody is winning on the other side of that trade, all right? And who is that somebody that's always winning, right? That's what we're digging into today, all right? Is the smart money. They're always behind. They're the winning party, right? It's a casino, right? Come on, the house. This is the house edge, right? The house always has an edge, right? That's why we're called I'm the trade. I'm the house edge, right? This is our house edge, right, in the market. Okay, understanding and knowing how the market actually operates. Okay, as traders, as investors, and as speculators, when we come into the market, we're made to believe that we control price. All right, that is our buying and selling pressure that makes these markets move up and down. As we just established, this is not true. Okay, we have no idea of this entity called smart money. Okay, we have no idea that they even exist, but they are the liquidity provider. All right, and you and me and everybody else in this game here, all right, we are all in this group. We're in the group of uninformed money. All right, speculative uninformed money. So them being the liquidity provider is their asset, right? They control, they set the price, as we already established in the who behind money. They set the price of it, okay? So if they want NAS and Q right now to tank, all right, that's what it's going to do. And it's doing that with a purpose and with a reason, and we're going to get into why the market moves in a little bit, okay? Why it does the things that it do, right? To get to the side of smart money, there has to be a shift in your thinking, okay? There has to be a shift in your thinking. Just like we talked about a mindset, right? So, but it all starts up here, right? With how you think about money, all right? How you think about these markets. It's just how you think, right? Is your reality, right? The way you think is your reality, right? It's your perspective, okay? There has to be a shift in your thinking. You have to understand that the markets are only efficient for smart money, okay? The central banks, they drive price, all right? So this wasn't built for us. It wasn't built for us to be in here making money, okay? It's built for us to be cannibalized, right? By the smart money, all right? It's built for us to lose, all right? We're not supposed to be winning here, okay? Yes, some days, sometimes, like, you know, in the casino, right, people win big, right? That's what attracts people into this, in this realm, right? When you see people winning big, right? Some people will win, yeah? Some people do win. They have to give some, all right, for to attract more people in this arena, you feel me? Okay? Just like in the casino. You see around you, some people win big, right? It's just the odds at that time, in that moment. And that's what makes people think, oh, that could be me. That could be me. I just have to keep putting more money in this slot machine. The markets are controlled, all right, to the smallest minute degree, all right. It's controlled. Every tick, every handle, right, is controlled, okay, in these markets, all right. It is AI, all right. Before even AI became AI, it's been AI. First, it was actual humans in when they had the open outcry pit, when people would be in the pit actually buying and selling. That sounds so fun when they're actually in the pit buying and selling, you know, where you can just see everybody like piling in, or like, let me get 200 watts, or this, let me get that. All right, that would be insane to experience right now in this day and age. I wish that's something that, you know, they could do, like, you know, once in a while, so the people can experience that feeling back then, how they were doing it. So, but when they moved to electronic trading, all right, AI completely took over. When they went electronic, AI completely took over, okay? So before it was humans doing it, and now it's completely autonomous, all right? It's AI, computer program that delivers price, okay? So when you see these candlesticks printed, it's an AI behind it that is delivering the price action, okay? This is wonderful, all right? This is wonderful news for you and me, like I said before, okay? Because it means that it can be identified and it can be tracked, all right? Because it's following code. If this, then that, all right? 10:50 is 9:50. 9:50 macro popping off. Nothing for us to do here, all right? Nothing for us to do here. We haven't established a session program yet, okay? If you're going based off on daily, previous days range, okay, we're in a sell program for you, because we took previous days sell side, okay? So I don't use it personally. I just frame entries around previous days levels, okay, but I don't use it to determine my bias for the day, okay? So if you want to, it's a personal preference. Like I said yesterday, trading is a solo sport, all right? What may work for me may not work for you. So just being here yourself and figure out what works for you, right? Just because I say something, use it as a foundation, but pay attention to candlesticks and what aligns with you, all right, in your thinking and your personality. Yeah, it's following code, right? So when you're able to do this, that's when you leave the realm of speculative uninformed money and join a side of the smart money, okay? So once you're able to track and identify IPTA, okay, then you're able to leave the realm of speculative uninformed money and join the smart money, the small group of people behind the scenes who actually control these markets, while we think is the big group of people here, us, all right, speculative uninformed money, all right, we're made to believe that we are the driving force behind the market, but we're not, okay? We're not. It's a casino. The same way the casino makes its money, right, is the same way this casino makes its money. Every game, every slot machine, every machine in the casino is rigged for the house to always win, okay? The house always wins, all right? It's called the house edge. And I'm the house edge traders, okay? We got a house edge that we're talking about right now. Right now, right now. Previous week's low is in the crosshairs for me today. For this week anyway. Okay, so now that we kind of understand a little bit of how the market operates, okay, let's talk about IPTA. Let's talk a little bit about IPTA, the algorithm that is delivering these candlesticks in front of us, okay? So IPTA, IPDA, stands for Interbank Price. Felt a bit of a carrot coming out of my mouth. You better get back inside. You're going down this belly today. What you talking about? What you mean? I tried to come out my mouth like, I don't chew you up already. I'm sorry. Squirrel! IPDA, IPTA, stands for Interbank Price Delivery Algorithm, all right? Interbank Price Delivery Algorithm. Interbank Price Delivery Algorithm, IPTA. And that's why we talk about IPTA signatures, right? IPTA signatures. So the algorithm, all right, that delivers these candlesticks in front of us right here, all right, it has a purpose. It has a purpose. It's not just moving these candlesticks up and down with no plan, no purpose, right? No process, no procedures, no protocols. It's not doing that. It's not willy-nilly, okay? It has a purpose, right? So let's talk about that. So how the market's algorithm moves price, okay? So the algorithm that controls price from the central bank level, okay? So from the central bank level, the big dogs, the giants of this world, all right? Of this world, right? The giants of this world. There's two worlds. All right, but anyway, all right. From the central bank level, all right, IPTA only moves for two reasons, right? So its purpose is two things, right? It's to seek liquidity above and below price, okay, which is in the form of highs and lows, all right? And second, to reprice into any inefficiency above and below price, which is like fair value gaps, volume imbalance. Okay, if you don't know any of these, head over to ICT's YouTube. All right, watch core content month 1. Okay, and it'll give you a better understanding of everything that I'm talking about right now. All right, so go over there to ICT, the mentor of your mentor. Okay, and get the real information. Okay, I'm just basing off of what he's taught me and what I've learned from him. Okay, so 2 reasons, right? IPTA moves only for 2 reasons: to seek liquidity above and below price. Okay, that's why for me our model is heavily revolving around liquidity. Okay, so we don't do anything until liquidity is taken, right? External liquidity and internal liquidity. Okay, we don't do anything when liquidity gets taken. That's when our model actually begins, right? That's when it's like, okay, something's about to happen here, right? So it's only moving for 2 reasons, right? To seek liquidity above and below price. Okay, so this right here, this high, this short-term high, this is London session high. Okay, this is liquidity, right? People are told when we come into this to put your stops above highs and put your stops below lows, right? Leave below lows, because that's where is the ceiling and the floor, or however they call it in retail. However they call it in retail, you know what I mean? The ceiling and the floor. And that, all right, that's what they're told. Well, that's what we're told when we initially come in here. Put your stops above highs, put your stops below lows, okay? And that's where liquidity rests. So there's a bunch of liquidity. There's a bunch of people. Hold on, let me get the drawing 2 here. There's a bunch of people, right, that have got their stops here. And right now, as this swing low has created, there's a bunch of people that has their stop down in here as well, okay? And it's the job of IPTA to cannibalize on these swing lows, okay? So that's all it knows. It knows where the liquidity is, right? And it knows where the inefficiency here. This is an inefficiency, it's a fair value gap, all right? It's a gap in price. You see, as price came right into there at 930, we came right into this inefficiency, okay? Right here, and then it retraced back inside of the range there. Okay, so this is the job of IPTA, right? To fill to reprice, to fill any inefficiency above and below price, and to seek liquidity above and below price. All right, so liquidity is something that's is for me anyway, is the hardest one to frame an entry a setup on. Okay, that's why I pretty much like liquidity. Liquidity is just, it's so obvious, it's so clear. We have session liquidity, previous days highs and lows, previous weeks highs and lows, previous months highs and lows. Okay, it's simple, right? But liquidity is everywhere. There's so many liquidities, like which liquidity is the highest probability, right? But for me personally, okay, it's easier for me to understand and see the liquidity more than inefficiency. Okay, so this is an example of what liquidity and inefficiency is, and that's pretty much all that IPTA is seeking. Is seeking liquidity or is seeking inefficiency. All right. Let's get this off the chart though. So understanding why, right, the purpose of IPTA, all right, and understanding these movements, why it moves the way it moves, right, gives you an edge over uninformed traders. All right, just by knowing this information, you have an edge, right? This is our house edge, right? I'm just saying, I came up with that name for a purpose, right, with a reason. This is our house edge, right? I'm the house edge traders, right? This is our edge. So look for areas where price hunts for liquidity or moves to fill inefficiencies. Okay, and for us here, I'm the Trader Capital. We are, our main one that we focus on is liquidity, because it's easy on the eyes for us to see, and there's not so many well, there is enough liquidities for you to obviously be, get in a sell each and every day that we've been showing you, obviously. But for us, it's just easier for me to identify, right? It's easier for me to frame a setup around it than inefficiencies. But if you're in here and you find that inefficiencies are what your eyes are drawing to, all right, there's nothing wrong with that, all right? It's all IPTA signatures, right? You need to find one model with IPTA signatures that you trust and you execute. Okay, it's 10 o'clock. It's 10 o'clock. You know what that means? You know what that means? that means we're getting the session range. Opening range. We gain opening range because neither side of dealing range has been taken yet. Okay, so we do nothing, and now we have another opportunity for some action in this price action using opening range, which determines our session bias. Okay, so dealing range is for the day, right? Determines our daily bias, and open range determines our session bias. So this would be the AM sessions bias. Okay, let's set an alert over here too. But so far, nothing here for us. All right, we still haven't established step 1 condition. Okay, so there's nothing to do here. So if IPTA isn't seeking liquidity above and below price, or repricing to fill inefficiencies above and below price, then it's just consolidating. So it's three movements, right? It's either going up to seek liquidity, going down to seek liquidity, going up to fill inefficiency, going down to fill inefficiency, or it's consolidating where it's stuck in a range. Okay, where it's stuck in the range. So that's how IPTA moves. Okay, that's how it moves. It's imperative to understand that and know that. Oh. So now that we understand how the market operates, right, what IPTA is doing and what it's seeking and what it's looking for, all right, we need to curate a trading model, right, using IPTA signatures. Okay, as a technical trader, right, we only need one setup, one pattern to trade on. Okay, it's important to know that every trading model loses. Okay, you have to accept it. You're going to take a loss. The only two things promised to you in this game is that you're going to experience a loss and you're going to experience a series of losing trades. Okay, accept them, manage it, and that's all we can do. That's our number one priority. Okay, the goal is to find your unique model, all right, and grow with it, right? That's what I did. It wasn't until I was like, you know what, I'm gonna stick to one trading model. For me, it was one setup for life. One setup for life. Go watch that video. One setup for life on ICT. One setup for life. Is when I watch that, I'm like, okay, this one setup for life, I can see it. All right, it's based on liquidity. It's something that it resonated with me. Okay, and I could see it in the charts easily. So it wasn't until I'm like, you know what, I'm gonna stick with this model, right? One setup for life. I'm gonna stick with this model and just look for this model consistently. All right, and then as I started to do that, it started to evolve, right? I started to notice certain things and I started to refine that model, right? And now we have a process, we have procedures and protocols, but using the basis of that model, right? So start with one model and just grow from there, right? As you continue to follow that model consistently, you start to see different things in the price action that you'll be like, oh, I can incorporate this. You know what? I don't like doing this anymore now that I'm seeing this, because this is what the data has been showing me. I can flip this, I can remove that, add this, take away that, you know? And that's how it's been for me. It wasn't until I did that, that's when everything just became clearer, right? It became clearer, everything just cleared up. It's just like, oh, it just opened up. She just opened up to me bare, you know? Anyway, I'm saying all that to say is that just find your one model. It might not be the model that you end up trading your whole career, all right? But start with one model, all right? And then build, refine, collect the data, and the market will show you your model. You will find yourself. You will find your model in the market, but you have to start with one model first and grow with it, grow from there, adapt it, refine it, all of that, okay? So you have two options, right? You're either going to base your model around liquidities, or you're going to base your model around inefficiencies, or both, right? You can also have both, right? All right, we're taking open range sell side there. Session buys has been confirmed as a sell program, okay, in line with our weekly program. We have a high here. We don't have a low yet. Thinking about it, my continuation setup is really the 2022 model, I believe. I haven't been back and watched 2022, but I think that's I get why he did that. It's a solid model. Used around liquidity 2022 model is solid. Oh no, it's actually my retracement setup, actually, not my continuation. Well, it can also be the continuation, because if it takes liquidity and then come down, or it can be an inefficiency, right? Oh, see, for my continuation setup, I use both, either or, liquidity being taken above the key level, right, or an inefficiency being traded to and through in the key level, right? So one of my models uses two, both of them. All right, taking dealing range sell side. All right, uh, daily program has been established as a sell program, in line with our weekly program, in line with our session program. Everything is saying sell, 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 baby. Sell, 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 baby. Sell. It's saying sell, sell, after how many, days and weeks of the market going up. It's coming down for the liquidity, right, below price, right? There's a lot of people that have been buying in this bull run, all right, that have their stops at swing lows, right? And now IPTA is seeking those liquidities, right, before it potentially continues going higher, all right? Because it just established is moving for two reasons, right? Seek liquidity above and below price to reprice into any inefficiency above and below price. And if it's not doing one of these two things, it's consolidating. Smashed it now though. So you need one model, right? Only one model, one pattern that you're looking for. All right. I remember when I started, I was model hopping like a motherfucker. I was strategy hopping like a bitch. I never gave any model like enough time. I didn't collect enough data with it. As soon as it started giving me a series of losses, I'm like, you know what? This is bullshit. This doesn't work. And they were bullshit, and they didn't work. All right. But however, all right, it's not about the model. Is the most important thing here is risk management. Okay, you can flip a coin, all right, and if you have proper risk management, all right, behind the trades, flipping a coin, buying or selling, if you have proper risk management behind it, okay, there's a high probability that you'll be profitable. Okay, so it wasn't the models themselves, not that they work, so they were retail concepts, retail ideas. Okay, um which are flawed to begin with, okay, all right. And I also didn't know anything about risk management initially, okay. That's for tomorrow. Okay, tomorrow we're talking more about risk management. Okay, the holy grail of trading. We'll get more into it tomorrow. Risk management Wednesday, but today is Trading Edge Tuesday. Trading Edge Tuesday. Trading Edge Tuesdays, building your confidence in your trading edge. All right. Because it's not about my confidence, all right? I already have confidence in my trading edge. I've collected the data, enough data to know and trust my model, okay? My trading edge, and I know that it works and it's profitable, okay? It's about you getting in here, all right? Using these ideas and building confidence in your trading model, right? In your trading edge. Don't use my confidence. Well, you can use my data, right? But you always have to be in here and experience it for yourself, right? Oi, hold on. I may have missed it here. Because we do have this market structure shift in here, down here. It's still in the micro, okay. Still inside of the micro, that market structure shift. So time, all right, price is previous daily lows, also dealing range low, trade below it, come back. Well, we're taking sell side below it now. I'll need to see this go to be interested in the retracement, okay, but for a continuation, we've come back into this inefficiency, and then we came down, took a market structure shift here. I'm watching this, I missed it, and it's a bit, it's a bit like the other trade I took up here that I didn't wait for the swings to confirm. It's a bit iffy for me right now, right here, but I don't mind watching it, right? I don't mind watching it. Never in a rush to put my money at risk or anything. You feel me? Yeah, and one thing with this too, where would my stop be? Well, above this high here. Or on this candlestick high here. We're watching this continuation sell, okay? It's not the most pristine of setup, okay, but it does meet the criteria of everything that I'm looking for a setup. So we'll watch it. We'll keep an eye on it. And feel no type of way about it going without us, okay? So it's all good. It's all goody in the hoodie. It's all goody in the hoodie if we miss this one here. All right, we'll wait for post 10:30 to see if we get another opportunity. But if not, then will be another data banked, right? For, hey, as long as it meets all the criteria, just pull the trigger. Don't feel no type of way about it, right? Let's see if bread and butter is on the table here. Hey, previous week's low getting smashed, getting raided, all right? There's a lot of liquidity below that, right? You're seeking liquidity and inefficiency. We haven't got bread and butter yet. Let me see how many contracts this would have allowed us in though. Would have been a decent amount of contracts, I think. What? Still one contract in that tiny ass range? You guys see this range? It's still just one contract, Larry. That tiny ass range. Really? Are you kidding me? Bread and butter. Putting food on the table. Where's my pen? Bread and the butter, putting food on the table. Yesterday we only had one bread and butter setup. The other one would have been a loss. This tiny ass range here, can you believe it? Can you believe it? You know, PM session is better to trade because it gives you more contracts, less volume, cleaner setups sometimes anyway. Yeah, let's see if we'll get our terminus on this trade. It would have allowed us one contract here. Okay, so let's see. Let's see if we get -1. So it would have been for supporting time frame. This would have been the one that I would have been interested in. From my back testing that I noticed, yes, looking at price action yesterday, when it comes into the inefficiency, I want to see it at least trade to and through consequent encroachment of the inefficiency on the supporting time frame before I engage in it. So this one would have been the one, because this one doesn't trade to and through consequent encroachment of this inefficiency here. Anyway, this is a continuation sell setup. This is a continuation sell setup. We established our session and daily program is sell program. Okay, so we're either looking, it's only two trades we can take. We can either take a continuation in the same direction in terms of where price has taken, or a retracement, all right, going against that direction. Still would be in here, by the way, all right? Nothing's happened. Nothing's happened. We just got bread and butter. Okay, we're looking to see. Oh, we do have that sell side below price here, right above -1. So -1 is highly probable. Let's see what else is below price here. Let's see what else is below. Like, I'm watching it. It doesn't. It met everything. It came back into it. Took sell side inside of the side of the macro. It looks ugly, but it meets the criteria. Okay, we got this bad boy right here. This is PM session sell side from, where is it coming from? Wednesday, May 6th. We also have AM session on that same day below price. Is that -1 right there? That's -1 right there. For we're looking at 625. Yep, 625 right there. That's -1. We would have been in and out just like that. Just like that, just like that. Get me out of here. Sell side. Solid setup. Not the cleanest of setup, right? Not the cleanest, but all criterias were there. So now it's about me just pulling the trigger, regardless of how it looks. If all criterias are met, pull the bloody trigger. Now all I can do is just now watch it, all right? See what else it offers us, okay? Well, valid trade, valid setup. Good to know though, good to know. Good data collected there, right? Good data collected. So we need one model, right? As technical traders, we need one model. Yeah, with these, it doesn't make sense if we're not showing the PowerPoint. No. Okay, so I've got plan nothing for us to do here. All right, we'll be waiting until 10:30. First hour of trading is behind us. Missed the morning setup, but that's a-okay. All right, we're still watching it. We still get to watch it. Okay, we still get to watch it. Still happy and pleased that I was able to identify it. Okay, and watch it do its thing, right? Pan out as it was supposed to. So right here, yeah, technically it would have been the same entry because this one candle takes that low and takes this low, and it was a low. It needs to be a low inside of the macro, so this wouldn't have been a valid low. So this low would have been valid. So it would have been the same entry regardless of the time frame. Would have been the same entry. Okay then, you know, it's not going to come in the cleanest of form. All right, it's not going to come in this cleanest of form. It's not always going to be clean, pristine. All right, but as long as it has the same criterias, okay, jump on that. Pull the trigger. Rum pa pa pum, man down. I just shut a man down in Central Station in front of a big old crowd. Oh. Put me on a stage, man. Put me on a stage. Put me on a stage and give me the mic. Anyway, so once you have one trading model, all right, that has IPTA signatures, either is seeking liquidity or is looking to refill and price into an inefficiency, okay? So you either framing a setup around an inefficiency or you're framing a setup around an liquidity, okay? Those are the only two things that IPTA does, and if it's not doing that, it's consolidating and we want no parts of it, okay? So the third piece, right, where we get our confidence in our trading edge is a plan and process, okay? Like I said, successful trading is boring, all right? You're doing the same thing each and every day, each and every session, all right? It's nothing exciting, nothing new, right? And that's how you want your trading to be. Nothing exciting, nothing new. You know what to do when something happens, all right? So we base it on an algorithmic principle, okay? If this, then that. That's the same way IPTA is operating, okay? So that's how we need to operate, all right, to match the energy of IPTA, okay? So when it comes to a trading plan, okay, when it comes to a trading plan, you need to have a plan for these three things, okay? You need to have the plan for your account, okay? You need to have a risk management plan, and you need to have a trade management plan. And we're going to get into each individual plans right now. Okay, so when it comes to plan for your account, right? Plan for account. I have 3 funded accounts, 200Ks and a 150K account. All right, each account has a plan, right? Its purpose, right? It's basically a business plan for that single individual account. It's a single individual business, and each business, right, needs its own plan. It needs its own operating and SOPs, all right, standard operating procedures. Okay, so when it comes to a plan for account, okay, these are the questions that you need to answer, okay? How are you going to approach the market? How is this account here going to approach the market, okay? What is the goal of the account? What is the goal of the account? Is this account to meet ends, okay, to pay your bills, your expenses? Is it account to invest? Is this an investment account? Are you the profits or proceeds that you make in this account, is it going to be used to invest? What is the goal of the account? Or is this account going to be used for your lifestyle, right? Set a goal for each and every account that you're trading, okay? What are your monthly and weekly targets? Okay, what are your monthly and weekly targets? Before I get into my trading session, I always remind myself of my target going into the week is 3%. Okay, so once I hit that target, all right, I'm done on that account, right? It hit its target of 3%. It's done. We're no longer taking trades on that account, right? We're moving on to the next. Okay, like the more you're in the market, you need to have limits, right? You need to have limits set for yourself to protect yourself, okay? Because it's all psychological up here, okay? What asset class and market within that asset class will you be trading, okay? For us, we trade the asset class that we trade is futures, and within the market within futures is NQ, okay? So the asset class is futures. Within that asset class, the market that we trade is NQ, okay? So you can be a crypto trader, you can be a stock trader, you can be a forex trader, okay? But what market within those asset classes? All of those are asset classes, okay? Commodities, okay? That's an asset class. But what market within that asset class will you be trading? Okay, be a master of one. Be a master of one initially, okay? One asset class, one market within that asset class. All right. Once you master that one, if you want to add more, then add more. But it's not even necessary to add more to it. Okay, be a master of one. What days and times will you trade? What are your business hours, right? What are your business hours? Yes, some markets are 24/7, okay? But in here, futures market is Monday through Friday, 8, 6 p.m. to 5 p.m., okay? Yeah, 6 p.m. previous day to 5 p.m. next day, okay? I don't know what the hours are for that, but it's a 24/5, yeah, 20, no 24, yeah, it's 24/5, just a 1 hour gap that we have, and then it reopens again, okay? So 24/5, not 23/5, I guess we should say 23/5, because it closes on 5 p.m. and opens back up at 6 p.m. So we have that, that's where overnight starts, okay? So just because we have all these hours, what time is your business operating, right? What time are you looking to be in front of the charts, looking to anticipate your model, right? Based on liquidity, based on inefficiencies, okay? So you need to have the answers for these questions, okay? It's basically a business plan, right? For us here, okay, one of my account, right, is to harvest my ends, okay? I haven't quite decided which one yet because I'm trading them all the same anyway. Okay, they're all following the same model, same procedures, same protocols. But obviously, the outcome, the purpose of each one is different. Okay, but the model is always going to be the same. Okay, one is going to be for my ends. Okay, one is going to be for investments, and one is going to be for my personal trading account. Okay, so those are my three accounts and their purposes, okay? So for me, I'm trading futures and Q, okay? And my trading hours, all right, our business hours are AM session, okay, 9:30 to 11:30 New York local time, and PM session 1:30 p.m. to sometime, yeah, I'm done at 3:30 really local time, but I'm gonna stay for the full of the of PM session, okay, and be done at like 4:15, okay? So 1:30 to 4:15 New York local time. That's our business hours here at the Trader Capital. We haven't added lunch yet. I have been taking a few lunch session trades, so it's currently not part of our business hours, service hours, but later on, okay, we'll have a lunch session also trading. But for now, it's just the two sessions, New York AM and PM session. So once you have a plan for your account, okay, you need a plan for risk management, okay? This is important, this is the holy grail of trading. We'll get more into risk management tomorrow, okay, on Risk Management Wednesdays. But your procedures and protocols should ensure that no single trade or series of trades, all right, can significantly impact your account, all right? Capital preservation is our number one job here, and that is our goal here. It's 10:30, first hour of trading is behind us. Gonna wait for around the 1 minute though. We've come back in here, back into an inefficiency above external liquidity, previous week's low. Okay, we're about to cause a market structure shift back below it right here. This will be a perfect continuation setup for me here. But the only difference here is that we don't have time, right? Without time, we have nothing. Oh, we ain't talked about the most important thing about trading yet, time. Where can we fit that in there? Understand how the market open, plan, no, trader model. Oh, yeah, it will come on the model, innit? It will come on the model. We trade a time and price theory. Hold on. This material that I worked on is old, man. It's old and it needs to be updated, okay? So as I'm going through it and remembering everything that I put down in this material, I'm realizing that, you know, certain things are missing and certain things aren't clear, and certain things I'm literally not even doing anymore or don't even talk about anymore. So so I'm in a process of revamping them. All right, as we're doing this, I'm in a process of revamping the information. Okay, I like that. It took salsa, no, but I wanted to happen after. Anyway, now we've come back in here. Now, if you were to take this low, I would be interested, okay, because we have time here. It's not the best time, but it's also not the worst time. Oh, no. Took buy side. On the supporting time frame, we've confirmed the sell here. So just waiting for the 1 minute to confirm. Continuation, right, uses both liquidity and inefficiency, okay? Because this is inefficiency right here. If we do again entry, right, and price comes and takes this buy side here, it will be confirming a continuation, no continuation, a retracement setup, sorry. But we still have sell side down here, okay, as potential draw below previous week's open. If it gives it to me here, I'll be interested. Okay, we'll be in it already on a supporting time frame, and we'll take a look at that exits on that one in a second. We've got our first presented fair value gap on a 15-minute time frame that price has come into now, showing respect for it. Nothing so far yet. Nothing so far yet. But anyway, let's see. Let's see. And would have just given us bread and butter on that one. Nothing for us here yet. For retracement, I would want for you to take this sell side, all right, below the external liquidity, which is previous week's low, and then market structure shift back above. All right, for risk management, all right, like we said, you need to have procedures in place that ensures that no single trade or series of trade, okay, completely wipes you out of trading, okay, live to fight another day. So you need to have a risk management blueprint, okay, and this is what I suggest, right? These points are what I suggest, okay. You can tweak it to fit your needs, okay. Everybody's risk tolerance is going to be different here, okay. These are just ideas for you to work on based on you and for you to test out, walk it forward and see if it resonates with you, okay. Take these blueprints into consideration when you're setting your own blueprints, okay, and test them out, all right. Be in the charts, trade them, fill them out. You know, you might think that 2% loss or 2% risk is something that you'll be okay with until you take a 2% loss in your account and you're like, oh shit, that hit harder than it was supposed to, okay. That if you feel some type of way when you take a 2% risk loss, then you need to start reducing that risk, right? Okay, so that's the only way you will know, if by being in here and actually feeling for it, right? Feeling for the market, understanding what it's doing and how you're reacting to what's happening here, okay. That's how you adjust and that's how you work through your risk management plan. But anyway, risk no more than 2% of your equity, all right, in one trade, in one particular trade. You don't want to risk any more than 2% of your equity, okay. All right, have a model that offers a 1 to 3 RR. It's not necessary, okay. It's not necessary. You can be profitable with a negative risk to reward. I'm gonna actually take that one off because that's not necessary, okay. After a loss, all right, are you going to keep your leverage the same or are you going to reduce your leverage, right? You need to have procedures and protocols in place that, hey, if I take a loss here at maybe, let's say you're at 1% and you have a max of 2% for the day. If I take a loss at 1, all right, I only have one more left. I'm okay with just taking one more trade, right? But if you want to take more trades, then you might want to reduce the risk to obviously meet your 2% for the day. Okay, after how many wins are you going to reduce your leverage, right? For me, it's after 5 consecutive wins. Well, right now I'm at the lowest risk leverage, so there's nothing for me to do in terms of reducing risk or increasing risk yet, okay. I'm still in my data collecting phase. I'm just to the point where I'm starting to see consistency in my model in doing the same thing over and over again. So I'm starting off at my lowest leverage, okay, and as I build more confidence, all right, I'm going to increase that leverage. I'm going to work on increasing and decreasing that leverage, right? We're going to do, hold on. I would be interested in the market structure shift down there. Come back up. Taking buy side yet again. Nothing yet though. Nothing for me here, all right? Even if it continues, I mean, it retraces higher, okay? I haven't personally seen my continuation set up. Blah. My retracement setup, sorry, I just keep messing them up. But right at the 10:30, we do take the low here, market structure shift back above. I'm watching it, but it's not something that I would personally engage in. I would want to see it after this line appears, okay? After that line appears. But on the supporting time frame, it does happen after, right? Take that sell side, Market structure shift back above. Interesting. Well, let's see how it plays out, right? If the data supports it, I don't mind it. But right now, I don't have data to back this trade up, so I won't be engaging in it. So don't feel no type of way about that. Anyway, after 5 consecutive losses, because our job here, we know that the only thing promised to us is losses and series of losses, okay? So that's always at the forefront of our minds, okay? That we're protecting ourselves from the next loss that's coming. Even if we're on a high and we're winning, we're not gonna be blinded to the fact that, hey, the next loss is coming, the next series of loss is on the way. Okay, so I need to be prepared and have the mindset always, all right, ready to encounter the next loss. All right, that's why after 5 consecutive wins, I will be reducing my risk. Right now, it's not a factor, okay, because I'm at my lowest leverage. Okay, how many losses per day are you allowing yourself to take? Right, have a maximum loss per day. Okay, so hey, let's say and the max risk per day, right, per week, per month. Let's say your max risk is 2%, all right, and you're trading at 0.5% per trade, right? So that means you have 4 trades for the day, right, and to hit your max loss for the day. Okay, so have a max losses per day and max risk per day in percentages, okay, as well. All right, we always deal in percentages. It's always important to deal in percentages. And what is your weekly, monthly targets, right? Have a target, have a goal that you're hitting, right? If I take 2 losses, I'm done for the day. Set limits on yourself. You need to have a limit here. You need to limit yourself, because if you give these markets, these candlesticks, the opportunities, it will soak up all your time. It will soak up all your trades. You just want to consistently be in a trade, right? So set limits for yourself, right? So once you hit, what's your weekly, monthly targets? Once you hit those, you're done, right? No more being in the charts. All right, have a different account, okay? It has its own goal and targets, right? Once you hit that, you're done on that account, right? If you want to keep trading, right? But if you have just the one account and it hits its target for the week on Monday, technically, you can go and enjoy the rest of your week and be back next week, right? Fresh and recouped, right? That's it. But obviously, if you have multiple accounts, then you can obviously keep trading, but set a target, all right, a weekly target, a monthly target. And also, are you going to manage pro trend trades the same as you're going to manage counter trend trades? Okay, so retracement setups, right, are going against the program. Are you going to manage them the same as continuation setups that's going in line with the session program, right? Those are things that you need to have procedures and protocols in place when it comes to your risk management plan. Okay, this is where it's gonna differ for everybody, okay? Because we don't all have the same risk tolerance, like I said. Okay, and lastly, you need to have a plan for your trade management, okay? How are you going to manage each and every trade? Okay. This low doesn't take any high. It does come back in here though. If it gives it to me here, I would be interested in this continuation sell. Understanding that we're coming up to a macro. 675. Getting ready to pull the trigger. It will be a continuation sell setup. Gave it to me. Pull the trigger. Let's get our limits. Order in the correct places. Delete that now. We're looking at 675 right there. We're looking at 2.25. there, right there, right there. And now it's out of our hands. All right, it's in the market, the model, and the trade management's hands. Nothing for us to do here. Our trade will be invalidated if we take this high, which will give us a retracement setup. So when it comes to trade management, okay, this is basically how are you going to manage your trades, right? Are you going to manage pro trend trades like we just talked about, managing them risk management wise? Pro trend trade and counter trend trade, are you going to manage them the same? Are you going to take partials, all right, in your trades, or are you going to do full pull? Full pull meaning you put your entry right here, your stop right here. Right now we have a full pull situation because we're only in it one contract. I'm a partial trader. I always like to pay the trader when the market gives me the opportunity to, in terms of moving in my direction and in terms of giving me multiple contracts, okay, based on my risk management right now, okay, my risk parameters on this account per trade, okay, it allowed me one contract in this trade, and there's not much, you can't partial with one contract, right? You have to go full pull in one contract. So I'm taking everything out at -1, okay? But even if it was 3 contracts, right, you can be a full pull trader in terms of, hey, taking everything out at 0.5, all right, -0.5 or -1 or -1.5 or -2, full pull trader, right? Full pull means that you're not taking anything out of the trade. You're strictly, is either going to hit your stop loss or it's going to hit you for your target, okay, on the account. We got bread and butter setup here. Let's get one down for bread and butter setup. Okay, and also another thing that you need to ask yourself when it comes to trade management is, are you going to adjust your stop loss, right? So for me, right, I'm a partial trader and I do adjust my stop loss. Once price gives me -1, bearing in that it's giving me multiple contracts in the trade, right? If I have multiple contracts, once it hits -1, I adjust my stop to 0.75 of the range, right? That I'm looking for the market structure shift in. I adjust it there. Okay, and -2, I adjust to 50% of that range. And at -3, I go to break even, all right? Just a little bit better than break even. So I adjust my stop. So are you going to adjust your stop, all right? Even if you are taking partials, doesn't mean you have to adjust your stop, right? Because you can take partials and still leave your stop loss where it's at, right? But you need to figure that out for you. So what is going to work better for you? All right, for me, I use the Fib 2, all right, to help me manage my trades, okay, in terms of the range. It helps me manage my trade, all right? That's what I base my trade management on, okay? 1050 macro, we're about to kick off soon. Let's see how this trade plays out. So that's it on the trading plans, okay? So you need to have plans for account, risk management, and your trade management, okay? And next is the process. Process is something that obviously we talked about every time that we're here, okay? So I don't think we need to go so much in depth about it, okay? What's certain things anyway? We'll talk about certain things that we don't really usually talk about. So the 3-step trading process, okay, we have our step 1 condition, step 2 stage, step 3 execution. We already know what that is, okay? When it comes to step 1 condition, okay, this is where we determine a directional bias, okay? And you can go with a session bias, you can go with the daily bias, or you can go with the weekly bias, okay? And how you determine which one you're going to use is, it depends on what kind of trader you want to be, right? Do you want to be a day trader? You want to be a scalper? Do you want to be a short-term trader? Do you want to be a swing trader? Or do you want to be a long position trader, right? For us here, I'm the Trader Capital. We're day traders, so we go based on the the session bias, and we go based on the daily bias, okay? But you can also go with the weekly as well, depending on what kind of trader you want to be. Okay, so obviously we have the different ranges, okay, that you can use to determine each one of these conditions, right? For the session, for the daily, for the weekly. For the session, we use open range session, okay, which determines our session for that AM session, PM session, lunch session. Okay, and we use from 12 AM to current price action at 9:30 to determine our daily session, okay? But you can also use previous days to determine your daily session, okay? Previous days range to determine your daily session, okay? And for the weekly, I use Monday's range to determine my weekly program. So depending on which side of the dealing range is taken, all right, will give you your program going into that session, that day, that week, okay? So if high, dealing range high is taken, okay, that means you're in a buy program, okay? And if dealing range low is taken, that means you're in a sell program. Simple as that, right? Then step 2, stage, what sets up your trade, what does it look like, all right? First, we look at the economic calendar. This tells us when to anticipate a trade forming, okay? We look for medium to high impact news. That's why I always start my session on the economic calendar, okay? This is what tells me my optimal days to take a trade when I want to be taking a trade, okay? If there's no high to medium impact news, it's not optimal day for me, and really I'm not really interested in taking a trade, okay? I'll have a separate account for those, but for these 3 accounts, okay, I need to have, well, at least 2 of these accounts I need to have medium to high impact news, okay? 1050 macro. We have time. Okay, here is price. Let's see what it wants to do here. So far, nothing for me to do. Is a 1 contract trade anyway. All right, there's no reducing risk in this trade because we're only in it at 1 contract. So it's just gonna have to. We're just gonna have to let it do its thing. All right. So yeah. So first things first, we look at the economic calendar. It lets us know when to look to take a trade. Okay, that's also gives us our business, our days, right? Trading days that we're going to be in the markets here, okay? Then, right? Oh, this is where I guess time and price. I put time and price in this 3-step process. It still needs to come in the model though. It needs to be introduced in the model. It needs to be introduced here because then when you come here, you need to already know what time and price is. Anyway, we trade a time and price theory, okay? Meaning depending on the time, all right, and where price is at, we look for certain signatures around that price action to let us know that, hey, this is going to be a continuation setup, this is going to be a retracement setup, okay? So there are only 4 elements of the market, okay? There are only 4 elements. IPTA is only doing these 4 things in the market always, okay? It's either consolidating, which we talked about, all right? It's either expanding, all right? Which is when external liquidity is raided, okay? That's an expansion there to take that external liquidity. It's either retracing, okay, back inside of the range, right? Or it's either reversing, right? This is external to external liquidity, right? So all price starts from a consolidation, okay? Then we get the expansion. The expansion is for us here at the Traded Capital. That's when we get one side of our daily range is taken, okay? We get a bias, okay? So once that expansion happens, price can only do 2 things. It can retrace, okay, or it can reverse, right? It can retrace or it can reverse, right? This leads us to the 2 types of trades that we can engage in the market. So the market can only do these things once, these 2 things, well, 3 things, because it can also, actually no, scratch that. The market can only do two things after one side of the dealing range is taken, okay? It can retrace back inside the range of the dealing range to then continue higher in the direction that it just took, all right? Or it can retrace, all right, back inside the range and reverse by taking the other side of the dealing range, then flipping our bias, okay? So we always anticipate that the market is going to retrace to continue, all right? It's going to retrace back inside the range and continue in the direction of where it just came from. No. I will need to see a low taken. Yeah, I'll be waiting for it to form itself after the time. Losses are the only thing promised to us, okay? Losses are the only thing promised to us. Da-da-da-da-da. All right, got taken out there. QQQ. Let's look at the outcome of that. Loss of 160. We can eat those, all right? We can eat those. For me to be interested again in a continuation sell, I'll need to see this market structure shift here. Time 10:50. After that, we have this. Yep, nothing really here for me. And if you go into that one, the comment taking you out here. Cool. Fair enough there. -1. That's all it gave you. Our stop would be right here, our previous week's low. Previous day's low. So technically we still would be in there for now. This is the low I need to see taken for a continuation. But if not, there's nothing for me to do here. If not, there's nothing for me to do here right now. Right now. So yeah, two types of trades, all right? Continuation, retracement, all right? But we know that retracement can turn reversal, okay? The next step in our 3-step trading process is execution. Can you execute? Have your entry criteria been met? All right, this is how you're going to execute, manage, all right? Execute, manage, and close the trade. All right, this is how you're going to do that, all right? So for us here, like we said, I'm the trader capital. We have 4 entry criteria. All right, our entry criteria, the first one is time, okay? Because we trade a time and price theory. Without time, we have nothing, okay? Without time, there is no setup, all right? You might see your setup, but without time, there is no entry. I'm leaning towards macro setups, all right? And post 30s setup, but the post 30s are sometimes if it diffy, all right? If it diffy, all right? You're more highly probable to take a loss in a post 30 than a macro setup, okay? Doesn't mean you can't take losses in a macro setup, because I took a loss in the macro setup yesterday, okay? You're always going to take losses. That's the only thing promised to us here. All right, it's a guarantee, right? It's the only guarantee up in this game we're in. up in this battle, up in this battlefield. All right, you definitely would have been taken out of this one after. Let me delete this, get this off the chart. After -1, okay, you would have been taken out here. I'll keep it there. It's irrelevant, but you would have been taken out there if you had more contracts, right? But we only had one contract anyway. If it gives me this, I would be interested. Already got it confirmed on the supporting time frame right here on this swing low. Waiting for it on the 1 minute. Nothing yet. Nothing for me to do yet. Nothing. So our criteria, right, first is time, right? Like I said, it's post 30s or macro time frames is really when we're looking to take a trade, all right? Next criteria is a key level, all right, liquidity, all right? We need to see liquidity get taken. It can be external liquidity or internal liquidity. External liquidity basically is the highest and the lowest of the range, okay? So daily range high, daily range low, opening range session buy side, open range session sell side. These are all external liquidity. Okay, previous week's low, previous week high, previous day's low, previous day's high. These are all external liquidity. Internal liquidity is any liquidity inside of the range. Okay, so like we have previous day's low inside of dealing range low, instead of inside of our dealing range. Okay, this would be internal liquidity. Previous day is an internal liquidity, all right, because it's inside of the current range that we're trading in. Okay. So we need time, we need a key level taken, all right, liquidity raid, okay, in any of the liquidities that we just talked about, okay, and then we wait for a swing with a displacement, all right, and a market structure shift back above or below the external liquidity, okay. That is everything that we need to see, and then we can engage in the trade, okay. There are different types of entries. Obviously, there are different types of entries. You can have an entry on a mitigation block, a breaker, fair value gap, liquidity void, order block, or market structure shift. For us here, we use the market structure shift, the high of the market structure shift as our entry point. Okay, so there can be different entry points that you can use. Obviously, this we can go into more depth inside of the program where I can actually show you the charts that make sense, right? I'm gonna put a part in this where we can actually see the PowerPoint presentation that we're going through once the information gets, you know, updated. Took sell side below previous week's low, came above market structure shift back above it. Now this is something that I'll obviously need to start paying attention to. Starts in the 30s, boom, completes in the micro, but I want to see it happen after a time. Yeah, I want to see it happen after. So it gives it to me. Still interested here. All right. Continuation sell. Right there. Enter in. Wow. We're 2 contracts today. This is the first in a long time for a morning session 2 contract set up. Way. Anyway, 850, we're looking at 950 by 1 at 950. Let me delete this off the chart. We're looking at 950 here. And terminus at negative 1.5. We're looking at 2 or 4 actually. Oh no. I had 4. Oh. If we take buy side, I would be interested in a retracement buy setup, okay? Because we would have took sell side below the external liquidity, market structure shift back above. So if we're taking out of this trade right now, I would be interested in a buy there. So I'm just getting it ready. Nothing on that yet though, I'm just being proactive there before we do what we need to do here. But anyway, let's get back on this. We're looking at negative 704. 704. Can we get 704 on the dot? 704 right there. Let's pick our stop. Stop, we're looking at 32, 32, 32 on the dot, 32 right there. Looking at support and time frame, being we had the entry in here for support and time frame. We had that, and then we had these two, which would have been the same over here too. Boy, we're having multiple re-entries on support and time frame here. Are we paying attention to price here? Okay, will give me an indication, a first indication of whether I'm on side or off side here. Oh my god, I hate when these two things align. The arrow takes precedence over everything, I swear to god. So annoying. We were down 160 from our previous trade, okay. Are we getting bread and butter here? Nah, not yet. So these are the 8 steps to build your edge, all right? To build confidence in your edge. All right, first, you need to understand the market, which we just talked about, okay? You need to know your model, all right? 2, 3, you need to have a written plan, all right? Because without a plan, you're all over the gaff, right? You don't know what you're doing. 4, follow a repeatable process daily, okay? 5, backtest your model. 6, forward test it in real time. 7, demonstrate it with discipline. 8, go live with confidence, all right? So you need to do all these 8 things in that sequence, in that order, all right? In order to build confidence in your edge in the market. Like I said, we take a buy side here and take me out of this trade, I would be interested in a continuation setup here. We'll let a different account take that though. We'll let a different account take that. We'll be back to adjust what we need to adjust in the other one. Oh, it has to take me out before they tell me that I'm what's the word? Huh? I'm hedging. Like what? What are you talking about? Hedging. Okay, we're taking out that. That means we can go ahead and hit the go button on that. Wait, this is a, I put the right one, right? Because I'll be very annoyed. It's a long tool. Okay, yeah, long tool. It's a long tool. It's a long tool. Hold on. We're looking at 6. And for the stop here, let me delete this one. It's confusing me. We're looking at 7. Last trade of the session here. 7, 4. Right there. And let's go over to the other one to delete our limit orders. Do 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 do. Let's see the outcome of those trades. Let's get the outcome. Down 354 on the day. Okay, not bad, not bad. Not bad. Still within my risk parameters. Okay, still within my risk parameters. And now, wait, where is this from? Oh, it's from the the supporting time frame. That's what I said. I was paying attention to how it tells me that I'm offside here, right? So when we took that buy side there, let me close back above this inefficiency. So I'm supposed to keep price lower. That was my warning sign that I'm offside. Cool. Coolio. Let's get a snapshot of this. Let's delete this first. Take a snapshot. Get our losses up in here. And then we can bring that back. We'll be back for PM session on that account. We'll be back for PM session. And just like that. Those are the 8 steps to build your edge. Oh, I just took a trade right before, right? How are we gonna wrap up? How are we gonna wrap up here? I'm gonna wrap up those still. I'm going to do a trade performance review because I won't be taking any more trades for this morning session. What I did well today, all right, is that I showed up, all right? I got 1% better. Gained experience, learned lessons that I'll take into my next trading day, next trading session. Showed up today, all right, let my analyst lead, and the outcome was out of my hands, right? Showed up, did my job, all right, didn't deviate from it, and yeah, nothing I can do. Outcomes out of my hands. All the trades I took, I'll take them again, all right? This is yet another data collected, all right, against the 30 setup, okay? Yesterday we took a 30 trade and we took a L there too, okay? Not that macro setups don't take L's too, because this macro setup also was an L, right? But it gave us the other side, all right? It let us know, hey, we're offside. This is potential. This is where we're going, all right? This is where we're going for today, okay? So fair enough. It's very much pushing me to just macro setups, you know. It's very much just push. You know what? I think the other 2 accounts, the 50K and the other 100K account, they're only going to be macro setups. And then the account that's already in drawdown, okay, that can be 30s and macros as well, okay? So yeah, think I'm going to do that moving forward, and just so we can keep them separate and we can have the data separated so we can see, all right, the outcome of either one, right? Oh, it should be strictly 30s then, isn't it? Should be strictly 30s then. Anyway, hold on. Let's do the honest thing here. Okay, why I fell short today with my wake up time. I woke up at a decent hour, but it was very difficult for me to get up, so I just took a 30-minute nap. I didn't get my morning routine in. Okay, so that would be where I fell short today. Chart wise, I showed up today. I don't think I didn't deviate from my procedures, my protocols. Okay, all the trades I took, I would take them again. Even collected data on this setup, all right? This setup was a valid setup. Nice to know that once all the criteria are met, I can just pull the trigger and not feel no type of way about the trade or how it presented itself, okay? Because they're going to come in different shapes and different forms, okay? It's not always going to look identical on the chart, but as long as the criteria are being met, all right, I'm good to go ahead and pull the trigger, okay? So that's just another data collected right there for that. Yeah, all the trades I took, like I said, I'll take them again and feel no type of way about it, okay? I was following my procedure, my protocols, my model, so the results were out of my hands, okay? One thing that I am obviously collecting more data in terms of is my time, all right, my trading, but the poster is if it's really something that I want to be engaging in. I said I wanted it to be crisp and it needed to have inefficiencies. Yeah, but this one was crisp and it had inefficiencies, so yeah, that was fair. How I can improve for next day, next trading session is just keep showing up, right? Keep seeking excellence in everything that I do. Don't let short-term adversity, losses, series of losses deter me. I did obviously experience a series of losses today, 2 losses in a row, which is fair, all right? I didn't let it deter me. I didn't go on tilt. I didn't chase the market. I just really waited for the market to present my model to me, all right? And then I'm engaging in it. The outcome is out of my hands, all right? Keep taking small steps in the right directions, all right? Eventually we'll get to our destination, all right? Keep analyzing the data, and pretty much just keep doing what you've been doing, all right? You're doing pretty good, baby girl. Just keep it up, all right? Don't let up, okay? And yeah, simple stuff. Keep it pushing. Trade breakdown, all right? Trade breakdown. So we had this initial setup, all right? Macro setup. About to take a fat L here, okay? Let's see though. Nothing I can do about this trade. It's only one contract. Larry, come back down to this inefficiency. Let's see how price behaves in here. We get a closure below that. Okay, that will be it. We'll be definitely offside, but we'll let the fat lady sing still. This is opening range sell side here. Came back into that. Okay. Yeah, trade breakdowns. We establish session bias as a sell program because we took the opening range sell side, and we also went ahead and took daily range sell side, giving us a daily program as a sell program. Okay. Came back into the external liquidities, into an inefficiency, this swing displacement, market structure shift back below the external liquidity, confirming a continuation sell here. All right, gave us just -1 contract anyway in this trade. So we would have been out a -1, and he didn't give us anything more. Would have come and taken you out after you reduce risk, okay? Then post first hour of trading, all right, 10:30, all right, we're still at external liquidity, which is previous week's low. Come back into an inefficiency above it, swing. Wait. Where was my trade? This right here. Come back into an efficiency above it. All right, swing with displacement, market structure shift back below that external liquidity. Okay, valid setup. As we can see, it resulted in a loss there. Okay, losses are the only thing promised to us here in this game. That was the trade we were actually in. Okay, we actually took that one. And then macro, 1050 macro, 1050 macro, 1050 macro. We're still above external liquidity. Okay, we take liquidity above it. All right, in this one it was dealing range sell side, and along with previous daily low. Okay, but we take liquidity above dealing range sell side. Okay, into an inefficiency. All right, swing, displacement, market structure shift back below that external liquidity, valid sell, valid continuation sell. Obviously, as you can see, all right, came and took us out. All right, and confirmed a retracement setup here using dealing range sell side and previous day's low. Okay, all right, and we're currently still in that trade. It hasn't given us bread and butter setup yet. Okay, showing respect for this inefficiency so far. Okay, so far it's not looking very enticing though, you know, but it is what it is. It will be our third loss of the morning here. All right, losses are the only things promised to us. Nothing I can do about that. All I can keep doing is just keep showing up. All right, keep following my procedures and my protocols, right, regardless of the outcome. Make it quick, make it quick, make it quick. It's about to be 11:30 on our ass. This is what happens when you take, you know, trades during 1050 macro. You're just subject to having to stay a little bit longer than you want to, you know. Nothing here that I would engage in, right? Because of time, right? We don't have time for this setup. So it's not a setup that I would really pull the trigger on regardless. So for me, actually we do take this low. Obviously it will be a loss, and it will be price telling me that hey. I want to keep going lower. Actually, psych, you thought I wanted to go higher, but I want to keep going lower. We're just waiting for the outcome of this trade, and then we'll wrap up here, okay? Because I need to get it. All right. It's about to take us out here. Thank you very much. Third loss of the morning. The outcome of this is 153. I can eat that. I can eat that. I can eat that. All right, and that is it from us this morning. All right, let's go ahead and wrap up. Nothing wrong with any of the setups that we took. All right, nothing wrong with any of the setups that we took. That's just how the cookie crumbled today. It is what it is. We'll be back for tomorrow morning. Let's wrap up though. Let's wrap up. Before we wrap up, I want to leave you with this. There was a time that I would finish a trading session and still feel lost. Even on days I made money, I didn't really know why it worked. And on losing days, I had no system to fall back on. That's the difference between guessing and having a real edge. And here's the truth. Most traders only focus on entries, but consistency comes from the system behind the entry. So if you've been watching and thinking this makes sense, but I don't have the full system yet, that's exactly why I created the 10% to 1% club. That's where we go deeper into all three pillars, the full model, the risk management system, the money and mindset principles needed to join the 1% club, and the exact process to follow daily. If you're serious about becoming consistent, that is your next step. I used to think the goal was to win more trades, but the real goal is to become the type of trader who can perform no matter the outcome. Because once you have that, the results will follow. That's all for today, folks. Thank you for tuning in. I'll see you in the next AM session, kicking off at 9:15 a.m. Kickoff once again at 9:15 a.m. To be on time is to be late, okay? So make sure you show up early. As always, I'm the trader here, signing out. Good luck, good trading. Happy bloody hunting. Remember, you only fail when you quit.